All right, you guys, today's video is going to be around estimated tax payments. So we're getting to close to mid-January where we have payments due. So first thing we want to look at is if you're a taxpayer and you're an employee, then typically you're going to get your paychecks and the taxes are already going to be withheld because the IRS wants your earnings to be paid into them on a pay-as-you-go. And so at the end of the year, this is all going to be reconciled down to your W-2. And hopefully you're going to get a refund because you paid in enough throughout the year. So now what if I transition from an employee down to a business owner, or maybe I just have a side gig where I earn some extra income throughout the year to try to survive due to inflation, right? And so over here, we're typically happy because our taxes have already been withheld, and hopefully our W-2 has enough that we have a refund at the end of the year. A lot of times, business owners are sad when it comes tax time because they've been earning their money. So you're going to be earning your money, and no taxes have been withheld. And so that's why we have these estimated tax payments. I'm going to show you the calendar here in a little bit. But basically, you need to break up the year into 4 different quadrants. So you have quarter 1, quarter 2, quarter 3, and quarter 4. That as you earn your money in each of these quarters, then you need to pay an estimated tax payment. And so now we are in fourth quarter and we have a payment due January of 2025 for this fourth quarter. So how do we calculate that and what taxes are due? So as a business owner, you're going to have to pay your federal taxes just like you would as an employee. You're going to have state taxes, possibly, depend on the state that you live in. Then we have what's also called self-employment tax. And so what we do is for the federal as tax advisors, we're going to go in each quarter and we're going to calculate the money that you've earned to see how much taxes you need to pay in throughout the year. So there's a couple of cool things in here that we'll talk about. So stay tuned to the video, keep watching. First, we're going to go over and we're going to look at a couple of screenshots. So first thing we need to look at is what are the due dates that I need to pay in my estimated tax payment. So you can just do a quick Google search. This is going to pop up. So income that we earned January through March 31st, we need to pay in some taxes that we calculate as tax advisors that you're going to pay that in by April 15th. Money earned from April to May, we're going to pay that in by June 17th. June to August, we're going to pay that in September 16th. And then now we're in this final period of the year that money that we've earned from September to December, we need to pay in our quarterly payment by January 15th. So how do we calculate those amounts? First, we need to go and look at the 2024 tax rates. And depending on your filing status is how we come up with the percentage that we need to pay in. So our federal tax, depending on how much income we earn, we can be in a 12, 22, 24, 32. See if this is going to break down 24, 32, 35, 37. So our tax brackets can keep to scale. So the more money we make, the more taxes we have to pay in. And we're not going to go in and look at each state. Each state varies on their dates as well. Okay, so let's go back to our whiteboard real quick. Pull that up. And so seeing on those tax brackets, so we can have tax that goes 0, 12, 22, 24, 32, 35, 37. So as our income goes up, our tax rate goes up as well. States can be, oh no, I'm in the state, we just have a 5%. I think that's pretty average. And then self-employment tax can be as high as 15.3%. It depends because this has a phase out of where we can max what we paid in self-employment tax. So we have a paycheck, we earn a W-2, we have a side gig. This portion may phase out depending on what our W-2 earnings is. And there's also some safeguards in here. So what we'll typically do for business owners is we want to make sure that you have good accounting records to estimate this. So we need to look at your income, and then we need to look at your expenses or your deductions to get to either net income or a loss. So if we have a loss, we really don't need to pay in any taxes because we haven't made any profit. But if we have net income, we need to see, okay, we need to look, do we have W-2 income plus business income, or is it all just business income? And so then what we would do, I'll just show you real quick, is we would actually run a projection for our clients. We pay for this projection software. So we can go in, tell the system, hey, for 2024, I'm married, I'm single, I'm head of household, I claim dependents. I have some W-2 income. But what we're going to do is we're just going to say, hey, we made $100,000 of business income. So if we have just a Schedule C, we're just a typical business owner, then we want to go in and put what we earn, taxpayer spouse, as that income. So let's just go in and put that we made $100,000. We always have our adjustments to get to adjusted gross income, our standard deductions, but we'd have a taxable income of 63,000 and our federal tax is 7,184 plus other taxes. So this other taxes is going to be our self-employment tax that we need to make sure that we're paying those in quarterly. So you basically take 14,000, pull this up. So you basically say, hey, 14,130. Need to make sure that that amount's being paid in. That's off because I hit it wrong. Divide that by 4. So quarterly, I need to at least make sure I'm paying in 3,532. But we also had our federal tax, 7,184. So we have to actually combine these. And so our 21,000 is going to be year end. I'm used to this portion being covered by W-2. So we know our federal taxes here, our additional self-employment tax, and then if we have a state, we're going to have state withheld. So this, we're just looking at federal in this example. So that 21,314 divided by 4. So every quarter on those due dates, you'd pay in $5,328 to the federal government so that you're paid in throughout the year. Okay. And so I highly just recommend you work with a tax advisor, work with them all year, especially each quarter, have them run a projection like this so that you know exactly where your numbers are. Okay. And then the other question that we typically get is, okay, what if I'm an employee or I'm just a business owner or I'm an employee and I also have a share of a percentage of a business with a partner. So same thing, what you'd need to do is you would be keeping books and records. So you'd have your income, your expenses, gets this net income or net loss. We have a loss, that loss could actually offset some income up here or possibly even some W-2 income up above. Different rules get into that. It gets really complicated, so it's not something you want to do yourself. But on this, if we just have a percentage, let's say we had $100,000 profit here. I'm only a 25% shareholder here. So I'd have $25,000 of additional income that I would need to make sure taxes are being paid quarterly. So that's really the gist of it, is knowing, okay, am I a W-2, taxes already withheld? Then great, I should be fine, should be set up for a refund, hopefully. If not, you need to adjust your W-4 withholdings. If I'm a business owner, taxes aren't being withheld. The biggest thing that you do not want is you do not want a surprise tax bill. Especially you just saw that last amount, 20,000 plus, that you've already spent the money. Now you got to come up with $20,000 to pay your taxes at year end. And so how can we set things up? If you've watched some of my other videos, I'm all about systems. If we manage the system, then everything's going to be set up. So what you're going to do is you're going to work with your accountant on your books and records quarterly. And then they're going to tell you what needs to be paid in. So you can just get those payments off. to the Fed, and to the states. This is not all taxes that can be due as a self-employed because depending on what state you're in, there could be other taxes as well. So we're just talking about federal and state taxes here. And so if you have a system, work with your accountant, get your quarterly amounts, make the payments. And as you go monthly, you just need to set aside, you can set up that amount that you need to, or that percentage that you need to set aside into your bank. And I would typically would say use a savings account. So the funds aren't intermixed with your checking and your savings account. So that way you're not touching these funds that we need to set aside for federal taxes. And if you're working with a tax advisor, as we work on this right here, we're also going to look for tax savings ideas that you can implement. So up here, not a whole lot of tax strategy you can do around this. Business owners have a lot of tax saving ideas right here. So we got to earn our money, we got to spend our money, and then pay taxes on that bottom number. So hopefully you guys like this video. If you guys want any other videos that you'd like to see or additions to these videos, let me know. I'd love to do that for you. Like the button, click the like button. I hate asking for this stuff, but it just kind of makes us feel good, when we're providing content that people are watching it, they actually like the content. And we'll catch you on the next video. Show us some love. I appreciate it.